Hey guys, hope you're doing well out there. It's time to take a look at shares of Google Incorporated after they reported their Q2 results. Shares moving a little bit in the after hours, up about 2.5%. We'll go through this Q2 print, which is yet again stellar from Google as they came in with a top and bottom line beat. We'll talk about all of their different segments, including of course search and YouTube. We'll talk about the all important Google Cloud, which continues to soar in revenues, up about 32% on a year-over-year basis. We'll talk a little bit about their news stories. Of course, briefly mention the antitrust probe that's going on over in the US, also now that's going on over in the UK. I did take a listen to the conference call over at Google, which just ended at about 5:30 p.m. Eastern. Normally, I tend to not take a listen to Google's earnings call, but you got some pretty big news as it relates to CapEx on their press release, and so I did want to break that down, and I have comments from their conference call on my X. We'll go over all their different segments, the operating income, the operating margins, all of the good things we like to do here on the channel. Take a look at the balance sheet, the cash flows. We'll jump into the technicals as well. This is a weekly view dating back to 2009. It doesn't get more picture perfect than this. And so that's why we'll take a look at Google's from a technical perspective, see maybe where you can step in, maybe where it would make sense to peel off some of your position, lock in some gains. Hey guys, hope you're doing well out there. It's time to take a look at shares of Google. We do this once every 90 days. And usually anytime we're taking a look at it, we're singing that good music about Google simply because their reports are usually extremely stellar. Year to date, you haven't seen your shares move up all too much, basically flat year to date. And so you have underperformed the other Mag7 names, maybe outside of an Apple. And you do have some overhang from regulatory scrutiny. You also have some fears around AI. We'll look to quell those in this video. Also, from a valuation perspective, won't get into the valuation in too much depth in this video, but just know Google is trading less than about 20 times in earnings. You are probably also trading underneath times 20 times cash flow. And so just keep that in mind. For a company worth $2.33 trillion, you're actually looking at probably an undervalued asset. And I'll make the case for that as we go over their different business segments. But first things first, we got a revenue print of $96.4 billion. That was good for nearly 14% growth year over year, beating those expectations on Wall Street, which were right around $94 billion. So Wall Street continually underestimating the print that this company can put out. Even the high-end estimates were underneath 96 billion. Again, Google posting 96.4 billion on that top line, growing 14% off of this base certainly isn't easy to do that. You also got a beat on the bottom line as GAAP EPS came in at $2.31. I believe the expectations were somewhere close to $2. Now, in terms of the different business segments, you of course have the services segment, which includes YouTube and Google search and their different subscriptions and Android and platforms. That came in at a whopping $82.5 billion, still growing north of 10% at about 12% year over year. And then the all important Google Cloud, which of course competes with Azure and the behemoth AWS, is growing rapidly, still nearly 32% up year over year at $13.6 billion. Just very quickly, Google Cloud has now surpassed the revenue figure on YouTube, and maybe even down the road could perhaps even surpass profitability on the YouTube segment as well. As we look at the guidance, or pardon me, the upcoming quarters over at Google, you're expecting somewhere in that low double digit, high single digit growth rates. At least that's the expectation on Wall Street. My guess is, considering the fact that they just put up a quarter of $96 billion, they'll, in my opinion, easily come over this $97 billion. In fact, they might actually even be able to put up a print in Q3 that's just around $100 billion in top line revenues in the upcoming quarter. And then of course in Q4, my guess is they'll come well north of $110 billion, considering that is when advertisers like to go crazy, especially for the holiday time periods. Now, you do have this news and the fact that we had Netflix earnings last week. We covered that here on the channel. Certainly stellar results from Netflix as well. They continue to gain in terms of the distribution gauge as it relates to TV watch time, but you still have YouTube remaining up in the top, remaining and holding that number one spot in terms of viewing time, at least on the TV, commanding about 12.8% of total viewing time on television. That's the largest lead among media distributors and its largest market share to this day. So YouTube continuing to fire on all cylinders, continuing to hold market share. I think they have a very distinct product there. The long form videos tend to work really well. Of course, creators are also becoming extremely popular. And then you also had commentary in the conference call saying that shorts are now viewed about 200 billion times daily. That just absolutely blew my mind. I thought I read that wrong. I thought it should be 200 million, but it was in fact 200 billion times daily. That's the views shorts are getting. And so even the short form content certainly is taking off here on YouTube. Now, in terms of their different antitrust probes, you of course have that scrutiny as it relates to the Chrome browser and maybe monopolistic practices here in the US. You also had the UK launch an antitrust probe both on Google, but along with that on Apple as well, as it relates to strategic market status, saying that they're simply too dominant, they have substantial and entrenched market power, and they have a position of strategic significance. Now, look, I mean, I wouldn't say that's false because, yeah, these companies both do have entrenched market power, and maybe both of these companies have done certain things to harm competition in those geographies. Look, I mean, these sort of court cases tend to drag on for a long time and tend to settle out eventually. In fact, I think Google's still contesting their other case over in Europe of roughly 4.1 billion euros. That is from 2018. So my guess is you'll continually have this probe come up over time and it will last a long time, eventually get settled out into the courts. Now, from the conference call, I mean, a couple things to really pay attention to. Of course, we took a look at their top line numbers, things looking absolutely spectacular. You also had operating margins come in at 32%. That was flat year over year. Some benefits they did see simply from efficiencies in their workforce, but some of that did get taken away due to another legal settlement this company had to pay for. Now, the all-important CapEx figure, which we got from all of these hyperscalers at the beginning of the year, I think for Amazon, it was close to $100 billion. For Meta, it was somewhere around 70. For Google, at the start of the year, the guide for 2025 CapEx was at $75 billion. This quarter, they just raised that to $85 billion for the full year. And when we get to the cash flows, you'll see this company is certainly aggressively increasing CapEx spend. A lot of that is going into servers. Roughly 2/3, in fact, of the CapEx is going into servers. And then 1/3 of the CapEx investment going into data centers and networking. So again, if I have to tell you over and over, this means it's really bullish for companies like Broadcom, first of all, which makes custom GPUs, or otherwise known as TPUs, for Google specifically, also probably bullish for NVIDIA that continue to supply Blackwell GPUs to a company like Google for their Google Cloud product. You're also seeing this rapid growth in CapEx because you're seeing high demand for Google Cloud products. Certainly you're seeing that 32% growth on the cloud business as well. This does affect their P&L down the line, maybe a little bit because you're seeing increased depreciation. And of course, you're seeing lower free cash flow as this company continues to spend more on CapEx. But again, if you tend to ignore things like free cash flow in the short term, certainly you're seeing the growth rates on GCP continuing to accelerate, and the investment that they're putting into their servers and data centers and networking will continue to pay off on the cloud business. You'll continue to see demand being met there because you're, believe it or not, still supply constrained over on the cloud business at Google. You have a backlog of roughly $106 billion. And so the more they can invest on that cloud business in terms of data centers and servers, the more they can meet this backlog of Google Cloud demand. And so believe it or not, they still have to continue to invest in CapEx. And they also briefly mentioned that 2026 CapEx will be higher than 2025 CapEx. They didn't give more color on this, but in my opinion, that's again, hugely bullish for the continued AI build out over on the semiconductor side of things. Think Broadcom, TSM, ASML, and of course you have the heavyweight NVIDIA probably leading the pack there. So continued bullish signs over the semiconductor businesses, and probably in my opinion, you'll have the bullish signs from AWS and Azure as well sometime next week. They'll likely, in my opinion, raise CapEx, or at least go over the CapEx they stated at the start of the year. The other thing you got on the conference call was just continued belief and strength that the search business is still holding up, and in fact, it's continuing to work out. You did have a mention that the paid clicks were up roughly 4% year over year. Google Lens search queries are now up 70% compared to same time last year. Advertisers are seeing more of an ROI when they're using AI into their campaigns. They're seeing 14% more conversions. They're seeing 19% more conversions when they're using AI smart bidding. And so Google, in my opinion, is going ahead and disrupting itself. There's all this talk on Wall Street and all this talk in media that Google is being disrupted by competitors like Perplexity and Anthropic and ChatGPT. Well, in my opinion, I think based on the results we're seeing, based on the growth rates we're seeing over at search, Google is certainly looking like it's disrupting itself. It's incorporating AI into its own search results. It has AI overviews, it has Circle to Search, has Google Lens, and of course has the Gemini standalone app as well. And so as a Google investor, this should certainly make you happy because Google isn't just sitting on its hands, not investing in the future, not investing in AI and letting competitors eat their business. They're in fact making those changes to their search business themselves and seeing better conversions from advertisers, also seeing more queries from users and probably a stickier product in general. So overall, good signs from Google. You're seeing the search business continue. You're seeing YouTube continue to grow rapidly, nearly at $10 billion in this most recent quarter. And then of course you have Google Cloud at north of a $50 billion annualized run rate at this point, continuing to show promise. They're growing roughly 32% year over year. On top of that, you have profitability continuing to hum along over at this business. These services remains the bread and butter, printing roughly $33 billion in operating income. That's off of a $82.5 billion revenue base. You also have Google Cloud more than doubling its operating income from last year, now sitting at about $2.8 billion. Again, that's off of roughly $13 billion of revenue. I think long term you get to roughly 20, 30, maybe even as high as 40% operating margins on your cloud business. And eventually, in my opinion, I think this is doing roughly $25 billion a quarter. And so if you put roughly a $100 billion Google Cloud business annually at close to, let's say, 30 or 40% operating margins, and you apply a multiple to that, well, that's probably roughly a $1 trillion business right there. Eventually, I think YouTube also gets to a $1 trillion business from a valuation perspective. And so that's how you can justify a roughly $2.3 trillion market cap just today. And that doesn't even include the search business that's printing roughly $33 billion worth of operating income as well. So again, from a valuation perspective, things certainly are looking attractive over at Google, despite, again, the run up that you've seen in shares over the past month and over the past number of years. Now, in terms of their financials, Google likes to kick things off with their balance sheet, and certainly I would too. If I was sitting on about $95 billion worth of cash, the balance sheet is also something I would put straight up on the top of my financial release. But you also do have the fact that long-term debt is ticking up over at this company, went from roughly $10.8 billion up to, call it, 23.5. So they did take on about $12 billion worth of debt. In fact, they mention it here in terms of the additional information that they did issue some fixed rate senior notes for roughly $12.5 billion in the most recent quarter, used for general corporate purposes. As we get to the cash flows, you'll see this company certainly does have a case for taking on that long-term debt. Isn't overly concerning, considering you're still sitting at about $160 billion in terms of current assets and just call it $140 billion in total liabilities. So still well excess assets in terms of total liabilities. And then from a P&L perspective, you have that $96 billion revenue figure we put up in this most recent quarter. Over the past 2 quarters, that's at about $186 billion in terms of a top line. You are seeing expenses continue to increase over at this company. Cost of revenues went from 35.5, call it, up to 39 billion. R&D went from 11.8, call it, up to 13.8. And then you did see growth in sales and marketing also on your G&A side. So certainly the expenses over at Google are continuing to increase, and in this most recent quarter they did increase slightly faster than I think we have seen in the past. Some of that, of course, is due to the fact that you have that AI talent war happening in big tech, whether it's Meta poaching a bunch of OpenAI directors and senior engineers, or it's Google going out there and getting a bunch of other OpenAI or Meta engineers. I think there's a bit of that talent war that's happening, and so they're likely having to pay up a little bit more for those R&D engineers. And then on top of that, this company dealing with a bunch of settlements and lawsuits certainly is having to pay out those lawyers and have those excess fees tagged on. So that is adding to a little bit of their cost and expenses. That's why you're not seeing huge operating margin expansion. In fact, you're seeing operating margins be flat year over year at 32%. But nonetheless, I think those are short-term headwinds that I think down the line, as Google becomes more efficient, as their engineers in the company begin to use more AI for coding and development, I think those efficiencies begin to unlock themselves just fine. And then from a cash flow perspective, we come down to operating cash flows in the most recent quarter, about $27 billion. Same time last year, close to $26 billion. The key thing to note though is your jump in capex. It went from $13 billion last year, which, especially if you compare it to 2023, was already a pretty big jump, now at $22.5 billion of capex in just one quarter. And over the past 6 months, Google spent roughly $40 billion on capex over the last 2 quarters. So again, tells you why this company is needing to, first of all, raise their full year capex to roughly $85 billion, but also tells you that 2026 capex will likely continue to be higher than $85 billion. If you annualize a quarter like this, you get very close to $100 billion. I fully expect Google to have 2026 capex somewhere around 100, maybe even $110 billion. And so when you look down the semiconductor stack, if you think the bull run is over, if you think the AI build out is over, well, there's certainly a long way to go. These companies continue to spend aggressively on the AI build out, in my opinion, at least for the next 1 to 2 years. Certainly you're seeing reasons for that from the cloud strength demand. And so because you spent roughly $22 billion in capex in the most recent quarter, and you generated about $27 billion of operating cash flows, only leaves Google with about $5 billion of free cash flow in the most recent quarter. And with that free cash flow, they have to certainly pay out a dividend now of $2.5 billion. They also have to continue to buy back stock for roughly $13 billion. And so that is why you saw the issuance of debt for about $12.5 billion, at least the net issuance of debt, about $12.5 billion. In my opinion, that's simply to continue with the dividend, probably increase it over time, and then continue aggressively on the share buybacks, considering the valuation over at Google remains relatively low. So in my opinion, issuing that $13 billion of debt, certainly not a bad thing over at Google, especially because they want to continue to aggressively spend on capex, and likely the rates that they'll get for those notes will be super low. And so in my opinion, taking on debt to continue the heavy investment, not necessarily a bad thing over at Google. Now, from a technical perspective, like we said, this is a nearly 16 year uptrend over at shares of Google, and you're just humming along. You're trading about the middle of the channel, slightly higher. You are about 2% higher in the after hours. Your next move to the top is probably somewhere here in the 220s. Believe it or not, in my opinion, you continue to chop sideways, moving higher in this uptrending channel. No reason to think you're going to suddenly break out of it. I think if you get pullbacks in shares of Google down to, call it the 160s, even lower, maybe in the 150s, that's where you're aggressively picking up shares of Google. Any dips below, I think you continue to dollar cost average. As you make your way to the top, you could maybe look to lock in some profits, take some profits off the table with Google. Really, in my opinion, there's no reason to, considering this company is financially remaining relatively strong, continuing to grow at a very healthy pace, and they're returning cash back to you in terms of buybacks and now a dividend as well. Also, the valuation still relatively compressed over at this company. So that was my take on shares of Google. Another fantastic quarter. I think if you're an investor, you're feeling pretty good about this quarter. Also, from a capex perspective, I think there's certainly reasons to continue to bump up that capex, especially as long as demand on cloud stays very strong, and you already know what to do. From that capex figure, you're probably running out and going and buying Broadcom or Nvidia or TSM sometime tomorrow. That was my take on shares of Google. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening. I'll catch you guys in the next video.